Hi, this is A.K. Nani from Smart VRC. Today we are going to dwell upon the auto sector prospects in the medium term, whether it is a good buy or buy. Steel. Steel is a basic raw material for the components fitted in auto sector, automobiles. So steel prices are up by about 18% from the lows of February, March and April. So 18% is a substantial jump. Copper. Copper is up by 67%. 67% is a very big jump, not only from the March lows, but even from the pre-COVID levels, it is up by almost 18%. So copper has become very pricey. Aluminium is again 40% up from the March, April, May lows, and again about 10% up from even pre-COVID levels. Rubber is almost 100% up from March, April, May, June, even July lows, and 100% is a big jump. In fact, it was much higher, but it has retreated, and still even from pre-COVID levels, it is almost 60 to 70% up. That is substantial. Coming to the crude oil, even if we discard a sudden dip in prices for a couple of days, even it went to the negative territory. If we remove that, then from $20 a barrel, it has increased to about $46-47 per barrel. That is big jump of 130%. Nevertheless, it is bit low, about 20% from the pre-COVID levels. So these are the major factors which can drive either way the demand for automobiles. In summation, these are the price variations in major raw materials, and then the crude. Now, so far so good. All these variations have come mostly during the later part of second quarter and the current running quarter, and BSE Auto Index is up by 105% from March lows, and 105% is a very big jump considering that the whole broader BSE sensitive index is up by about 70% and auto index is up by 105%. And why not? Because most of the automobile companies have reported very good results, but not all. So this is the status of 1 year low, and all these 1 year lows were made in the month of March 2020. So during last 1 year, from the 1 year low, Maruti is up by 95%, Ashok Leyland is up by 188%, Hero MotoCorp 115%, Tata Motors 188%, Mahindra and Mahindra 205%, Exide 53%. Looks pretty small if we compare with the other OEMs. And of course, Exide Industries is a battery supplier. Then Motherson Sumi is the biggest gainer among all, 224%. Now BSE Auto Sensex is up by 105%. That is the story. So most of the, I can say most of the upside has been discounted in auto related stocks. And why I am saying so? Let's consider why there was so much of demand for automobiles, especially low cost four-wheelers and the two-wheelers. One of the reasons was the pent-up demand. There was a demand in the later part of March, then April, May, June. Literally, there was no sales either in four-wheelers or in two-wheelers. So there was a pent-up demand which got fulfilled in the subsequent 4-5 months. Secondly, there was a need for the own vehicle due to COVID. Due to COVID, people want to travel alone. They don't want to travel in buses or the local trains or any common means of transport. Third reason was need for self-vehicle due to stoppage of transport services. Yes, many of the transport services in many of the states were stopped temporarily and people wanted to go to their jobs and they need a vehicle. Festival times. Yes, there were lots of festivals last month and that also created a demand for four-wheelers as well as two-wheelers. Fifth reason was the low rate of interest, the falling rate of interest. That was another reason due to which the EMI got reduced, and added with the discounts offered by the OEMs, that made a very lucrative deal. Yes, as we discussed about the discounts. So these were the reasons. So far so good, but as we have seen, the raw material prices are pretty up, not pretty up, but substantially up. And now what is the factor which can further create the demand? Let's consider a few of the factors which can have an impact on the demand. As we have seen, the spurt in raw material prices would put a pressure on the car or two-wheeler manufacturers to substantially reduce the discounts, and don't be surprised if they come out with a slight hike in prices. That is also possible. Another reason is the low rate regime is almost over for the interest rates, and as the RBI in the meeting has not reduced any interest rates further, there is enough liquidity available in the system, and in my personal opinion, I don't think the rate of interest are going to fall further from the current levels. So that incentive of reduced rate of interest will not be available furthermore to the customers. Pent-up demand getting fulfilled. Yes, whatever pent-up demand was there, it is already over. Now no more demand coming from the pent-up side. Spurt in petrol and diesel prices. Yes, petrol and diesel prices are substantially up, and the cost of running these vehicles is high. Loss of millions of jobs. Yes, ultimately this will get reflected in the economy. Loss of millions of jobs means lots of people will not be able to pay EMI, are not in a position to buy these four-wheelers or two-wheelers, and we have to consider this factor. This factor, even if it is 10%, that can be substantial. salary cuts were also implemented, and in some of the companies that salary cuts have been restored, means those salaries have been restored. That is a good news. But due to salary cuts and due to loss of jobs, I'm very sure many other people have become very cautious. So they are not going to spend so easily. The only positive factor what I can foresee is in India, in our country, economy has bounced back. There has been a V-shaped recovery, but in the other big economies, the big developed economies like US and UK and Europe, they are still undergoing very severe phase, and the economy in those countries have yet to pick up. As and when the economy picks up, there will be a demand for four-wheelers and two-wheelers in those countries, and definitely the companies which are engaged in export of these vehicles or the auto components will get benefited. But one should be very cautious in selecting the stocks. Sector-wise, I believe the story is almost fully discounted. But as I said, the companies which are engaged in export of vehicles or the auto components, including the tires, that can still have the potential to rise. So ultimately in stock market, not only in automobile sector, but this was only a case in point we were discussing. Whatever may be the case, whether it is the economy or the company or the sector, one should always be rational. He should think rationally, and it pays always. Don't look for maximizing the returns. If you believe that the stock price is going way ahead of the real worth of the stock, then it is time to say bye bye. Post this presentation, there will be a question and answer session, and I request all the participants to write their questions in the chat box along with their name, and I shall reply one by one. Thank you very much.